And joining us now to share his commentary on the day's market performance is Vik Sharma from Differential Capital. Vik, thanks so much for your time this afternoon. So a new week, and it seems like we're kicking things off on the back foot. What's fueling the nervousness in markets? Are traders just sitting on their hands ahead of the PCE print out on Friday? Or are markets just taking a breather? I mean, you think of US markets on Friday hitting record highs.
Yeah, I think, first of all, thank you, and Darling, thanks for having me. There is a bit of a breather analogy that you're kind of putting through. I think, obviously, gold's been, in for a lack of a better word, been a golden trade year till date, and it still continues. That precious metal is doing exceptionally well, and that again speaks to all the uncertainty that U.S. policy is bringing down on the world markets.
Yeah.
I think one of the things potentially, I think to think about in this breather is that our rand has actually been very strong, and guess what? Our 10-year yields are actually compressing quite a bit, right? So essentially, the circle of money is that money is coming in, it is buying in your 10-year yield, and your 10-year yield is lower now, which is the benchmark for actually evaluating equities. So down the line, I do expect some of this positivity to actually go and come into our own SA Inc. stocks, which I normally tend to call, over the course of, let's call it end of the year or next year. And not to mention, gold doing quite well, resources doing quite well. That means those companies will do well, the employees will do well, they'll get more money. And that is our currency. That is, South Africa. So essentially, I would say, all these signals, despite all the uncertainty out there, does point to that locally, we shouldn't be very negative, whatever is there in financials or in SA Inc. type stocks.
But can we really take credit for, the stronger rand, Vik? Because it does seem like we're just benefiting off the back of a weaker dollar.
Yeah, I think, but whether you want to take the benefit of it, you obviously bore the brunt of it, right?
Yeah.
One thing about the stock markets is we are more real than anything else, right? There is no emotion out there, right? Whether you're benefiting because, it wasn't your, own doing, or whether you're getting hit because it wasn't your own doing, money is normally quite unemotional. So, the long and short of it is, yes, people don't like dollars. They have to diversify. Guess what? Think about it. At the start of the year, could you have said that JSE will be up 20%?
No.
Right? And JSE
Yeah.
is actually up 20%.
Yeah.
And I'm actually telling you the part which is more local potentially could actually do better. Over the course of the year or even next year. So we do still have pockets of things that could go up. And just to think about it from a foreigner's perspective, South Africa is too small in the overall EM, right? So some people actually do ignore us. Guess what? I think in dollar terms, we are above 30% return. So at some point in time, those guys have to actually wake up and say, guess what? Here is a small country which is actually doing exceptionally well in its terms of stock market. Let's go and revisit. And then when you rerun the numbers, you'll actually see, hey, there is value here.
And talking EMs, let's look at what's playing out in China, Vik. The People's Bank of China leaving their key interest rates unchanged, a move that was expected, of course, as we are seeing a slowdown in economic indicators over the past month. Do you think we're going to start seeing stimulus from the PBOC this year, or do you think that, the taps have run dry and they may be just sitting on their hands for now?
Yeah, I think, again, a very binary outcome, whether there'll be stimulus or not. And, if there is stimulus, obviously markets will start to run. Stimulus aside, overall, the, Chinese market has actually done exceptionally well considering the underlying fundamentals. Partly maybe because of, there were talks of stimulus or boosting the economy,
Yes.
etc., which have boosted the economy itself. I think Chinese economy, probably has run more than what fundamentals warrant because of the fact that there is this expectation of, that government will come and bail them out. Should and would they come bail them out? I think I don't have an opinion, but if that is supposed to happen, obviously you could see a rally in the assets there. But overall, removing that outcome out of this equation, China seems to have rallied quite a bit and done quite well relative to what the underlying fundamentals are.
And a sector that's done quite well in China is the EV market, right? But here we are then seeing Berkshire Hathaway dumping its entire stake in BYD. What have you made of that move? Does it suggest less confidence in the group's prospects, or is it just, indicative of the competitive landscape?
I think it's more indicative of the competitive landscape, right? I mean, if you come to think of it, I think there was the news or conjecture that was coming out that these guys were actually discounting their cars in China because there was like an overproduction that had happened within China. So I think they were giving a lot more discounts in that EV adoption within China. So I think it is more speaks to the fact that there is a competitive outcome or where they might have overproduced, and now they obviously want to get rid of stocks. Doesn't probably bring home the theory that there is some kind of hole that is being built, but it looks like that it's more a cause of overproduction and that inventory needs to be moved, and that's why they're discounting it, and probably that's what Berkshire Hathaway is seeing.
And let's bring it back home. You talked about pockets of opportunity in SA Inc. stocks. And I want to then hone in on the buildings materials segment, where we are seeing PPC making progress in its turnaround strategy. The group saying EBITDA jumped more than 20% in the 4 months ended July. It is reporting some margin pressure in SA, though markets liking the update. I think the last time I checked, that share price was up over 3%. Is this an industry you are seeing value in, an industry you could potentially see growth in? I mean, PPC is also, building a plant in Cape Town as well. It means that they are quite positive around infrastructure and new developments in the country.
I mean, you hit the nail on its head, right? I mean, I think they are trying to, basically run a cost optimization plan while investing in the country, thinking a little more long term. And I think, if you remember, your guest on Friday itself also mentioned Raubex, which is also in construction industry. So I do think it might not be what I call as the flavor of the month right now, the construction sector, but the opportunity is definitely there. That companies are trading at much lower P's. There is a company which is kind of telling you that we are taking a 10-year view on the country, and we do think that we'll be able to sell or use this capacity while saving cost. I think it just you need a little bit of what I call as some positive news flow to come, and you could actually definitely see a lot more re-rating of that construction sector.
Vic, it's quite refreshing to have someone that's really positive about SA Inc. stocks, because all we hear about is either telcos or your Naspers process or the gold counters that we've been seeing rallying over the past few months. All right, let's hit pause on the conversation for now. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
Skyler Corp listed in the US. Essentially, it's in medical equipment. I think anything that has to do with medical has a lot of regulatory hurdles, and you're seeing regulators trying to bring down prices, but not in medical equipment and innovation there. I think they are really heavy in robotics, and essentially is trading at 50 PE, which is very nice. But Child has a neutral rating on it. $470 and is currently trading about $372.
I'm finding value in South Africa. You could probably take your pick at this point: banks, retailers, industrials. I'm going for construction. So Raubex is where I see value. The share price has come under a lot of pressure over the last few months, unfairly so. Really good order book growth momentum. Lots of opportunities coming through from Sunral's perspective, as well as tender activity generally being quite robust, both from an infrastructure perspective for government as well as from the private sector. Even though it doesn't, we're not a construction site yet.
Yeah.
When we become a construction site in South Africa, Raubex will be a key beneficiary, a bit of a last man standing type narrative playing out.
All right, Chantal, of course, betting on the construction sector as we were talking about there, Raubex, her pick. And then we have Kia picking Striker Corp. Let's get your analysis on those counters, Vik.
Yeah, I think I've got less knowledge about Striker Corp. The PE sounded a little too high. I'm not very well versed with the medical equipment industry, but clearly, I know it does take a lot of investment, a lot of time to get through the hoops in the US. So he might have a reason, but out of my domain, Raubex. Internally, our systems have flagged that stock as well. We really do like it. I think it's derated. Possibly because of all this negativity around SA, that things are not moving in the right direction, and maybe rightly so. But that company is probably trading at like a much lower forward PE than what market has kind of given it. It does pay out a dividend, was in a net cash position, and I think for what the industry has seen, construction industry over the years, and you would imagine, there's Murray and Roberts that is potentially gone. Avenge has now become a very small cap stock. So whoever is left probably is going to do bulk of the job if we do see this upsurge in construction. So yeah, I think that is one of our preferred picks in the construction sector as well, Raubex. So I fully agree with Chantal there.
So one of your preferred picks, but not your stock pick. Where are you seeing opportunity this afternoon?
Yeah, my previous stock picks have been SA Inc.
Yeah.
So I would probably be, let's call it, forgiven for picking up MTN. And MTN more so because of the fact that it has come under pressure because there is a DOJ case going against it, right? But think about it from a perspective of, the stock's trading at 12 months forward PE of about 10 times, and the long-term average is about 12. Right. And what you are sitting on is, the mobile penetration in Africa is still not close to what we are in South Africa or in any developed nation. So first is mobile penetration, then there is data penetration, right? So these guys are obviously, just remember that we had data lines or fixed line communication in South Africa. In Africa, you don't have that. So in order to adopt communication or go online, you only have these mobile phones. So while they're getting their pricing power back in Africa, the data growth rate still sustains their momentum. So to me, I think the growth is in the right direction. I think African countries which wanted to probably, let's call it, resolve their issues from a macro perspective have done that, from the likes of Nigeria to the likes of Ghana. Right. So that's now in the base. Now you do have growth. I think DOJ is a bit of a concern, but think of it 5 years ago, if MTN would have gotten that kind of a fine, their balance sheet probably couldn't stomach it because they had to pay a big fine in Nigeria. Now the balance sheet is in a much better space. They've paid off much of their, what you call as foreign debt. I think even if there is a, let's call it, really bad outcome out of this DOJ, their balance sheet will be able to sustain, if at all there is something. Other than that, I think a very good growth story. Within Africa, I think that's the next leg of positivity, if you have to think about it, away from dollar, away from DMs. We are still thinking EMs. I think eventually money will think frontier as well. So to me, I think MTN, definite growth story, which probably is being underestimated. The currencies are already in the base, possibly, multi-year story, at least 2-3 years. And even though they're not paying big dividend because they were paying off a lot of their debt, I think at the end of the year, the conversation starts with respect to, okay, you're making so much money, you're paying off debt quickly, when will the dividend start to move up? And I think that company possibly has to answer those kind of questions as well. So to me, it's just more of a tactical opportunity that it's under pressure because of something which, even if as a bad outcome, the company can sustain its operations. It's not really, a risk of that, hey, there will be a over-levered balance sheet here. We don't even know, whether it will be a bad outcome or not. But to me, I think it's more tactical. Other than that, I'm still a lover of, as I said, more SA Inc., kind of ignored opportunities.
All right, let's leave it there. Vik, thanks so much for your time and taking us through trade this afternoon. Now, that was Vik Sharma from Differential Capital.